Well, thank you for watching our weekly podcast again. The Congress is back at work after the 4th of July break, and this week the main focus was on a small business tax cut bill here in the Senate. And next week we'll be talking about another proposed tax reduction bill that the President has put forward. So let me describe each of those a little bit. The small business tax bill, which we've been considering on the Senate floor this week, is a proposal that we think would incent companies to hire more people and create more jobs. It says that if a small business does add to its payroll, either by increasing salaries of existing workers or by adding new workers, that up to $500,000 of additional payroll will be eligible for a 10% tax credit. And so the company would be able to essentially get a tax credit or have the taxpayer pay the cost of 10% of that increased payroll. This is added to another provision in the bill that says if you buy a piece of equipment that you're going to use in your business and you do so between now and the end of the year, you can get 100% expensing for that. That is, you can write off the entire cost of that equipment, even though you may use it in your business for 5 or 10 years or whatever period of time. So we think those are good provisions. I hope we were able to get the votes to proceed to consider the bill. We're now in additional procedural hurdles have been set up that we have to try to jump to see if we can get a final vote on the bill, but I hope we can. The other tax proposal, which the President made this week, but which is likely to be the center of discussion in the Senate next week, is his proposal that at the end of 2012, instead of going under current law, the tax rates that people have enjoyed for quite a few years now would go back to the higher rates that were in place in the 1990s when Bill Clinton was president. That's the way we wrote the law because, quite frankly, the lost revenue from doing it on a permanent basis was too great, and therefore we limited it to the period now up to the end of 2012. So the President has said he would like to see us go ahead and extend the lower tax rates that were put in place during the Bush presidency, extend those lower tax rates for the first $250,000 worth of income that any couple or any family receives, and that only as to the income above that $250,000 would the higher tax rates that were in place before the Bush tax cuts go back into effect. This is, of course, very controversial. I think the Republican position is that they want to extend all of the Bush tax cuts that were adopted. And of course, President Obama's position is, and the one that I agree with, is that if we're going to make any serious effort at reducing the deficit, we can't afford to extend all of the Bush tax cuts. We need to extend those that are most important, and that would be extending the Bush tax cuts for the first $250,000 of family income for all Americans. At any rate, those are the two tax issues we're coping with. I hope we can make progress on them. Frankly, the first is a proposal that I think would have some prospect of actually being enacted. I hope we can. The second is much more an issue that will probably be left unresolved until after this election. And then we will have to make, the Congress will have to make a decision on that in a lame duck session of the Congress, or the next Congress in January and February will have to decide it. Again, thank you for watching. I appreciate your interest in what we're working on here in Washington.